So before you get into any trade, here are some risk management questions to ask yourself. How many losses can you take into your account before you lose a significant amount of capital? And if you experience a drawdown that you are exposing yourself to, then how much will you need to recover in order to make up for that loss? Also, do you have trading rules or a trading system that you follow for every single trade, or are you gambling? If you have rules in place, how often do you follow them? Also, what are the common factors surrounding your losing trades? How about your winning trades? Do you have a trading setup, a time of day, how tired you are? Do you keep a trading record or journal to determine this? You should. Also, are you FOMOing in on trades? Or are you revenge trading? And finally, have you considered reducing your risk and or increasing the quality of the setups that you take? These are all questions that you should be asking yourself. So in summary, people love charting, but risk management is what keeps you in the game. Also, even the most carefully designed trading system doesn't guarantee success in every single trade. You should always know your entry, your take profit, and your stop loss levels for every single trade. You should make sure that your position sizes are set so that you don't lose more than 1 to 3% of your portfolio on any single trade, except for rare exceptions when maybe you could go up to 5%. And then there are very, very rare exceptions where you might decide to go above that. Number 5 is that you should calculate your win rate and know which setups have higher probabilities than others and adjust your position sizes and risk tolerance accordingly. Higher RRs are great, but make sure that you are actually winning and profitable. 1-to-1 or 1.5-to-1 or 2-to-1 RRs are fine as long as your win rate is there. Number 7, keep your eye on the risk that you are posing on your entire portfolio balance. You can risk 3% per trade, but if the entire market tanks and you're in a ton of trades, then you could take a much bigger hit to your portfolio than just 3%. Number 8 is keep a trading record or journal. Number 9 is to focus on survival for 90% of the time, and only when the markets heat up again, begin to up your risk significantly. If the markets aren't there, don't risk too much. And number 10 is aim to never let a trade that is showing significant profits on paper turn into a loss. Trail your stops to protect your gains or use evolving R to lock in some profits. Additionally, don't overtrade. Don't put on trades with position sizes too large for your account. Always think in terms of managing risk when trading. Instead of asking yourself, do I have enough money for this trade? Ask yourself, do I have enough risk available for this trade? Also, understand the different strategies you use and your edge. And if you don't have an edge, then don't trade. Just wait for good setups. Also, if you aren't an experienced trader, don't use leverage. We will go over leverage trading in more videos. So be sure to go over the videos that I have on trading with leverage or margin trading. These are available in the course at cryptoelite.com. And lastly, keep in mind external factors that will affect your trading. Are you tired? Are you hungry? Are you angry or upset? Is there any external factors that can negatively affect your trading? It is best to do something else and come back when you can be cool, calm, and collective.